This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
India and the European Union struck a long-delayed deal on Tuesday that will slash tariffs on most goods, aiming to boost two-way trade and reduce reliance on the United States amid growing global trade tensions. The deal is expected to double EU exports to India by 2032 by eliminating or reducing tariffs in 96.6% of traded goods by value, and will lead to savings of €4 billion, $4.75 billion, in duties for European companies, the EU said. The EU will cut tariffs on 99.5% of goods imported from India over 7 years, with tariffs to be cut to zero on Indian marine goods, leather and textile products, chemicals, rubber, base metals and gems and jewelry, India's trade ministry said in a statement.
Oil prices gained further ground on Wednesday as supply concerns lingered after a winter storm disrupted U.S. crude output and exports, while Middle East tensions lent additional support. Brent crude futures rose 11 cents, or 0.2%, to $67.68 a barrel by 0725 GMT, while U.S. West Texas Intermediate crude climbed 19 cents, or 0.3%, to $62.58 a barrel. U.S. producers lost up to 2 million barrels per day, or roughly 15% of national output over the weekend, analysts and traders estimated, as the storm strained energy infrastructure and power grids.
Moving on to the top news in the energy sector.
India stopped exporting diesel to the European Union this month due to the European Union's ban on fuel derived from Russian crude and instead sent a record amount to West Africa, shipping data from Capella and Vortexa showed, while Turkey's diesel exports to the EU slowed in recent months. The developments highlight that the EU policy, aimed at punishing Russia over its 2022 full-scale invasion of Ukraine, is prompting a further reordering of intercontinental oil flows, forcing India's oil refineries to seek new markets and disrupting Turkey's lucrative trade in supplying fuel to the EU. We think the most likely reshuffle would be for more Indian diesel to go into Africa and free up more Middle Eastern supply for Europe, Claire Morris, analyst at Energy Aspects, said.
U.S. officials are working to issue a general license soon that would lift some sanctions on Venezuela's energy sector, 4 sources familiar with the preparation said on Tuesday. A shift from a previous plan to grant individual exemptions to sanctions for companies seeking to do business in the country. Following the U.S. capture of Venezuelan President Nicolas Maduro earlier this month, U.S. officials have said Washington would ease sanctions imposed on Venezuela's energy industry to facilitate a $2 billion oil supply deal between Caracas and Washington and an ambitious $100 billion reconstruction plan for the country's oil industry. The large number of individual requests to the U.S. government has delayed progress on plans to expand exports and get investment moving quickly into the country, 2 of the sources said. Next, we have the top news in metal markets. Goldman Sachs on Tuesday raised its first half 2026 London Metal Exchange aluminum price forecast to $3,150 per ton from $2,575, citing a balanced global market that has supported investor confidence without triggering a rapid production surge. The investment bank also increased its fourth quarter 2026 forecast to $2,500 per ton from $2,350 but maintained its 2027 projection at $2,400. Goldman revised its 2026 market surplus to 0.8 million tons from 1.1 million, retained the 2027 surplus at 1.6 million, and raised its 2028 surplus forecast to 2.3 million. Anticipating higher supply and reduced demand from solar and construction sectors in China.
Gold broke through $5,300 for the first time on Wednesday as the dollar plunged to a near 4-year low, ahead of a Federal Reserve monetary policy decision. Spot gold climbed 2.3% to $5,305.65 per ounce, as of 0832 GMT, after hitting a record high of $5,311.31. It has gained more than 20% since the start of the year. The US dollar was grappling with a crisis of confidence as it languished near 4-year lows, exacerbating dollar selling, after President Donald Trump said the currency's value is great when asked whether he thought it had declined too much.
We will now look at the top news in the agricultural sector.
The European Commission plans to propose the suspension of duty-free sugar imports to ease pressure on European producers facing falling prices and increased competition. I will propose a temporary suspension of the sugar inward processing regime to ease pressures on sugar producers, the European Commissioner for Agriculture and Food, Christoph Hansen, said on X late on Monday. The inward processing relief scheme allows companies to import sugar at zero duty and without limits, provided the sugar is refined or processed into food products and then re-exported outside the European Union, but the announcement drew mixed reactions.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.